Good morning, everyone. How are you? Thank you for joining us. This is a big panel, and I think we have about half an hour with 10 minutes towards the end for Q&A on Slido. So if you haven't got the QR code to ask the questions, please load it up because I'm really looking at you for good questions to keep it rolling. I might start with you, if you don't mind, Ennis. I know this is a very one of the things we hear and understand in Australia when it comes to deep tech and innovation is we have excellent research, we have excellent ideas, but when it comes to commercialisation, we don't necessarily have the industry depth to pull through that technology. When you look at your members, where are they at in understanding how they might be embedding, new technologies into their businesses and their supply chains?
There you go. I think that works. Yeah. Good morning, everyone. Hope you're all well. I'll try and concentrate as I look out over the Opera House. Look, it's a really good question. Look, where I come from is the end user end of the technology discussion, although we have a lot of members who are directly involved in technology development and R&D themselves. Where they're looking to do is to be the users of technology. And there's a couple of points to your question there, which are good ones. Historically, we've been not too bad at R&D, although we're getting worse at it as time goes on. We're slipping down the rankings. We're not spending as much on R&D as a country that we used to do. And that's borne out by a whole range of data, OECD data and the like, where we're down towards the end of the rankings when it comes to R&D spend. And we've got an R&D review that's just about to really hit its straps, and hopefully that will find over time ways to incentivise businesses to invest more in R&D. Part of the problem is that we just don't have the incentives there. We have barriers to R&D investment. You touched on commercialisation. That's the big area where we have really dropped the ball. All of our research dollars and targeting is really towards the R&D end rather than the commercialisation end. And that's what we miss out on. And unless we commercialise, and there's a legion of examples of where we failed to commercialise, unless we commercialise, we don't really take advantage of that R&D spend. And that's really where we should focus in big part as part of that R&D review that is about to be undertaken. When it comes to adoption, look, we look at it this way, and businesses look at it this way. There are big challenges that industry is facing across Australia at the moment, and we represent businesses across defence, or the big defence manufacturers, construction, manufacturing, the care sector, where a lot of focus is on sort of what we call the 3Ds: digitalisation. Businesses well aware of the digitalisation challenge, decarbonisation, and diversification of product and market. And decarbonisation, the middle one I mentioned, is particularly important. We have our State of Technology Adoption report coming out next week, which tells us that just over half of businesses are well down the path when it comes to technology, the digitalisation part. Adoption of artificial intelligence, the most recent example, but that's about 52%. About 45% are actively looking at how to use technology to decarbonise their businesses. Very important as well. The big barrier here is skills within the existing workforce, as well as the emerging workforce, to take advantage of the opportunities. They're the numbers of where businesses are aware of activity. We always think there's a lot more going on behind the scenes, and businesses actually know what's happening within their own business.
Thank you, Ines. I'm going to just refer back to some of the comments made by Steph and Nadia. The commercialisation piece, the money flowing into a deep tech sector, there's lots of ways to look at this. We know that since the ideas boom, there's been a whole change in the landscape of venture capital as an example. But when we're talking about funding the unlocking of capability from a deep tech perspective, there's lots of ways to look at it. Blair, I might come to you talking about the role that the ASX plays, and then maybe Coby, you can talk about your experience listing in Australia on the ASX.
Fantastic. Thanks very much. I'm not sure. Can you hear me? Just a second. Yeah, you can. Fantastic. First of all, it's great to see so many people in the crowd here. It's a great discussion to be having, and I'm really thank you for having us as part of it. I would say it's really interesting. You know, if you think about the ASX and the role it's played in the economy over its history, you know, we have a deep history in funding speculative and startup mining companies. That has started to transfer over to starting up and funding companies in the tech sector as well. But 4 years ago, we created the All Tech Index. That now has companies such as, you know, Zero in it, NextDC, Audinate, Coden. Over the last 10 years, there's been about 100 tech companies listed on ASX. So now that's the second largest sector that we have listed on ASX. And when we speak to the big institutional shareholders, and Innes would be familiar with this as well, like there's a clear demand for companies that have technology as their core, that have a growing need for capital, and that have something that can be commercialized. Back to the point that was made earlier on. And you think about, this is not deep tech, but if you want a great example I've been speaking about recently is a company called NextDC, data center operator. That business is about an $11 billion market cap company. In the last 18 months, they've raised $2.7 billion in 3 transactions. So there's clear demand for companies that have a clear path, that have a need for capital, that have a growth platform, and that have something that can be domestic, but clearly if there's an international opportunity, that's even better. I think one of the things that we always say is when you're looking to think about a listing and trying to think about how do I get listed and how do I get access to capital, it's always important to be thinking about trying to get near the bottom of the index there. So the ASX S&P 500, the cutoff for that's about $150 million. So if you think about that as either not necessarily where you're going to be when you get listed, but getting closer to that, the higher up you go in those indices, the more institutional investors support you're going to get, both domestic and offshore. So maybe just a few stats there before I could turn it over. So the All Ords, as I said, is about $150 million. The ASX 300 is about $350 million. And it's about $1 billion to get in the ASX 200. And I kind of contrast that with in the US, the S&P 500 there, the cutoff to get into that is about 25 billion Australia. So it's a huge difference in the market. And that's one of the great things about this market. We've got an amazing super system that's kind of $4 trillion now, going to 11 over the next 20 years, looking for investments and is a big supporter of the ASX market. So there's capital looking for a home, but it's a smaller market, and therefore you can get in the indices earlier, and that's what gives you the support to, you know, to help grow your businesses. So I think that there's clear appetite for investments, and really I think that we will hopefully going to start to see more of that happening in the next 24 months as we kind of get off the highs of the private company valuation highs of 2021, and we get sort of closer to price and value. I think you're really going to start to see a lot more capital flowing onto ASX.
Coby, the company is incorporated in Israel, listed on the ASX. Israel obviously has an incredible reputation for, you know, moving at speed when it comes to strategic technologies. You know, deep tech takes a long time, but you also have to grab the opportunities. Could you just give us a little bit of a background on the decisions to list on the ASX and, you know, the profile of the company in terms of commercializing semiconductors?
Yeah. Yeah. So Weebit is an Israeli company. When we incorporated, in those days, it was about 2015, in Israel, the VC community, and in Israel, we have a very large VC community, and but they were very focused on cyber, on automotive, on AI, things like that. So semiconductor in those days was kind of a little difficult to get their attention. At the same time, the ASX, I guess, you know, was doing their push to how do we find tech companies, and there were several delegations that came to Israel, and I guess 1 + 1 = 2, or even more than that. And, you know, we were lucky also that one of our founders was actually a cousin of Ashley, who's sitting here from our board. So that also helped us with the Australian connection. And so we came over here and actually a reverse takeover. And I think it was a good decision at the time. And actually the ASX experience has been good for us in terms of, like Blair says, and we talk every once in a while, you know, raising money in Australia, it's actually been a positive experience for Weebit. There is interest in technology. There is, you know, the basics there, and we have raised. I mean, the fact is we have raised, I think, close to $100 million already over the years. So it's been good for Weebit, and I think talking to several of the CEOs of other semiconductor companies, the challenge is not raising money, but actually the day-to-day operation and the regulation, the ASIC/ASX. I think there's a certain real change in the way that they think that is required to really enable the tech sector. The tech sector relies on things like options and RSUs to grant to employees and so on. And all of the regulation around that is, I guess I apologize, but it's archaic in Australia, and it really needs to change.
Staying on the funding and where the money's coming from a deep tech perspective, Donna Looney, government has a role to play both in terms of the policy settings, but also with, you know, I guess some of the hallmarks of the Albanese government in the National Reconstruction Fund, which is really designed to plug some of those scale finance mechanisms. Can you talk us through a little bit about your department and where that sits?
Yeah, so I'm really happy to be able to be here today to talk about the initiatives that government's working through in terms of where investment can be useful in a broad range of things, and really where it is that we can look at policy and investment in terms of what's coming in the global environment that we're operating in at the moment. So I guess first and foremost, I'd point to the recent budget announcement around the Future Made in Australia agenda, which was a $22.7 billion commitment over a decade. And that's really to take to look at maximising opportunities that are coming through from the shift to decarbonisation, and as Ines mentioned earlier, the focus on that both from an economic and an industrial perspective, and how it is that we can help Australians to take advantage of that. And it's really in that economic and strategic landscape, but it's really about, you know, attracting and enabling investment, making it Australia a renewable energy superpower, value adding to our resources and strengthening our economic security, backing in Australian ideas and investing in the people, communities and services that that will need to drive this change. And I think that at the heart of that, modern science and innovation is really important. And obviously, the technology we need to achieve the change is key to that. And the sorts of technologies that you're talking about here today are going to be the enablers of that change. So for example, the government's recent investment with the Queensland Government and PsiQuantum in the quantum computing space is really important for bringing in the technology and capability that we need through that. I think that the structural shift that needs to happen is going to be built upon the technology that we can seek to have advantages in that space. You spoke about the NRF, and I think that you will see through the priority sectors that we have, that the government has identified for the NRF, all of them are reliant on the enabling capabilities that we need. So whether we're talking about you know, medical science or defence or value add in renewable energy, and all of those sectors, they're reliant on semiconductors, the technology that is going to be built that relies on semiconductors, and all of those things to be able to to shift the dial, and the investment piece of that is absolutely critical. So the purpose of the NRF is really to be able to crowd in investment in Australia and to be able to provide an additional source of funding to areas such as the work that happens through the investment through the ASX and others. And the last thing I might just mention is the ASCAR program through Defence, and I'll just acknowledge that the Defence Science and Technology Strategy was recently released, and it's all about an asymmetric advantage, and that's where it is that we're looking through that program to ensure that where it is that we have capability and a comparative advantage in technology, we're making the most of that to be able to really look at evolving technology and emerging technology, and in particular where it is that there's some nascent technology coming through that we can look to fund, where maybe there isn't a commercial pathway identified as yet, but it's going to be really, really critical to start looking at that now.
I think that's a really good place to kind of just segue into. Recently, innovationoz.com hosted a dual use tech forum, and on behalf of Defence Science Technology Group, and they were interested in understanding who are the SMEs that are selling to multiple market sectors, including defence and civilian markets, and what does the finance landscape look like? Because and I think it's really important for a small country like Australia to look holistically at the talent we have and how we unlock it. Speaking of ecosystems and where we focus, Damian, I might come to you if I can. A lot of people in Australia wouldn't realise that we actually have capability here. We can't do everything, particularly in semiconductors. What can we do? Where should we be focusing? And of course, the tech councils, what are your key areas is about the skills that Inna's talked about before. Can you talk us through some of the focus and the skills?
G'day everyone, Damian, CEO of the Tech Council of Australia. We represent around 160 companies across Australia, 70% of which are founded in this country. We also lead and proud to lead the Quantum Alliance, which includes 7 Australian startups, as well as multinationals who are very focused on this space. We just took a trip to the US recently, and it was very exciting to see what we would call the political focus on semiconductors and this industry as well, that this is driven by government. There's been an act, the Semiconductor Act by Biden in 2022. We visited the NVIDIA offices and can see the passion and focus that there is in the US around this space. But this is the reason that the US focuses on it is because they've also worked out that this is about their economic prosperity. It's not just a national security matter. It's something that has contributed to a distinct economic prosperity for their citizens. The TCA kind of looked at wealth per capita of the UK versus a US person only 15 years ago, and someone in the US would have been just slightly only had slightly 5 or 6% ahead on a GDP per person level. That's now up to 60%. The one biggest difference between the US and the UK is a significant investment in critical tech, which includes the semiconductor industry. So we are focused on it here. The good news is that we punch above our weight. When we look at the startups in Australia versus the rest of the world, we have about 1.7% of startups versus the rest of the world. In the quantum space, we have 3% of the startups versus the rest of the world, so nearly double. So that's an exciting start. But for us, the kind of big issues is what we would call the patient capital. What we're seeing with main sequence is exciting. It's something that myself and some of our members are invested in because it is thinking about this space from an investment perspective. But still, when we look at it a per capita perspective, we are about a third behind on VC investment in tech in this country, behind the US. So this, we think, is developing. If we look just 15 years ago, there wasn't really a VC market in Australia. Now there's probably $6 billion worth of private capital. The NRF is obviously going to help with that as well. So hopefully on the one stage, this is just a development piece and we will develop as the industry grows. But we do think it's critical that there is very, very significant thought in relation to R&D investment and private sector investment. We've looked into this. Australia is about a whole percentage point of GDP behind on private sector investment versus the OECD, something that Ines just mentioned now. It's not a small number. It is a significant number. We believe that's because our pension funds don't have the culture of investing here like they do in the US. When you look at a percentage of what they invest, if only 1% of our superannuation was invested in early stage tech or VC, that's another $40 billion worth of capital in the market. We welcome the NRF, but we want to see a faster deployment. We also have a culture here, and this is something the ASX may comment on, in relation to dividends. It's a culture that doesn't exist in the US. Investors in Australia expect a money return per quarter or per half on the profits of a company. In the US, most of that money, or a far significant portion of that money, goes back into R&D and investment into those companies. When we look at that 1 percentage point gap in GDP of private sector investment, it's almost equivalent to our dividend imputation kind of culture here in Australia. So there are cultural practices. We do think government needs to be involved. We do think we've got a strategic advantage here in relation to a focus in this space, but there's also a lot from a private sector perspective that we in the tech industry are campaigning for.
I'm really keen to have some audience questions to dig into some of the points that you raised. There's a big cultural shift required. I think my dad would say high on the hog. I think Australia's been living on for a long time, and which has really impacted the way we look at risk and long-term and vision. So look, questions, please. This is your opportunity to grill our incredible panel. Can I come to you now, Ken? I'm going to start with the phrase common use infrastructure. You're the CEO of Bradfield Authority, which is, I think this is something, a ripple of infrastructure required to scale deep tech industries in Australia. And I don't think they're well understood. Can you talk us through how you see common use infrastructure and why it's important to the semiconductor conversation?
Yeah, thanks, Corrie. A bit of context first, I guess. In just 2 years, Sydney is going to have a new international airport, not just any old airport, a major 24/7 international airport. Around that airport will be 11,000 hectares of an aerotropolis. So warehousing, industrial, logistics, advanced manufacturing, agribusiness. There's already $9.8 billion of private sector investment going through the planning pipeline to create the first part of that, and there's lots more to come. And at the heart of that aerotropolis is a new city of Bradfield, which is what our authority has responsibility of creating. And we as a development authority are doing all the things you'd expect us to be doing in terms of creating buildings and partnering with private sector. But we also have an economic development strategy to bring to that, which is exactly what your question's referring to. And that's the creation of an advanced manufacturing readiness facility. It is recognising that at our location in Western Sydney, there is a tremendous advantage in the manufacturing sector. We're going to get a new international airport, which is just 4 minutes away on a new metro line. And we also have a massive opportunity, which we've been talking about here on the panel, to take up around technology and in particular, advanced packaging on semiconductors. So our advanced manufacturing research facility will be in 2 phases. Phase 1 will open in the new year. It's got to focus on that advanced manufacturing. Phase 2 will be in a facility which will start construction on early in the new year, and that will focus on semiconductors. And the logic here are facilities that allow businesses to innovate. It's basically an innovation accelerator. It's access to high-tech clean rooms, kit and investment that is either not available or very expensive to access in Australia. The learnings we've had looking at facilities elsewhere in the world show that these work best where you've got a major private partner that you're with deep expertise in the area. So one of the things that we'll be doing through next year and beyond is securing a partner to go on this journey with us. But what we want is a facility which supports the development of this sector by providing expertise and the clean tech facilities that's required to support that advanced manufacturing and advanced packaging semiconductor sector, and do that at the heart of a new city, anchored by tremendous investment in the airport and the broader aerotropolis.
Thank you. So I think there's a lot more to talk about, as well as how the state and federal governments coordinate to make sure that that investment in those infrastructure is coordinated and makes sense as a whole. I'm going to ask a question from the audience, but to everyone, and feel free to jump in on each other. What do you see as Australia's competitive advantage in semiconductors being, and what's the best end market for Australian semiconductors? There's been so many examples given around where the applications are. Are there obvious areas where Australia's really good in terms of where we should be focusing? And does it matter about end markets, or is it more about where the capability is from a production perspective? Anyone want to jump in on that?
I might start. I mean, our focus is around that advanced packaging. We're not trying to knock Taiwan off their perch. That's probably not an achievable outcome for Australia. But targeting an emerging area where we can use those strengths of a high technology capability within this country, a skills base which is really second to none, with fantastic educational and research institutions as well, and the sorts of support that the Commonwealth Government's providing, this practical facility the New South Wales Government's providing. That's a great sweet spot, and it's about taking an opportunity which is just emerging. So we don't have to knock off leaders in a mature sector. We can get in there and develop capability and take market share as this targeted sector develops. So that's what we are betting.
Can I just ask, I think for my benefit more than anyone's, packaging. Can you explain packaging? Why is it important?
Okay, so as this technology gets more and more detailed, and the performance of what's happening on a chip and a circuit board really approaches the limits of physics, it turns out that actually how you locate the chips within the boards is actually a potential opportunity to get far greater performance. So the packaging is all about that. It's all about that alignment and the physical locations of those chips within the circuitry to get better performance. And in particular, what's the so what? Where's for Innes's members? What's those sectors which are looking for that? It is defence. It is medical. It's where you want. It is space and aeronautical as well. So where you want high performance outcomes in environments which have the potential to be disrupted by other things or have some other security requirement. So it's less likely to be in your phone. It's less likely to be in your fridge. It's more in those specific applications.
Okay, so tailoring to certain markets. I know we have some packaging companies in the room. Anybody else want to answer that question before we move on? Coby?
I think Steph mentioned Australia has, a very good engineering talent. Now, one of the things about semiconductors that happened already many years ago, and I think you alluded to it as well, there's a separation now between the design companies, the companies that design products, and the manufacturing facilities. So I think Australia, by the way, has perfect locations for manufacturing semiconductors, for the fabs, what's called. And by the way, you don't have to go to the most extreme fabs like TSMC. There's a lot of demand for fabs that are even, 65, 90, 130 nanometer. And I think Australia could definitely go into the manufacturing side. But even before that, designing semiconductors isn't very expensive, and you go to foundries that provide manufacturing services in Taiwan or in other places. So that, for me, is a very natural place to start and really just start growing the design space and encouraging startups to do that. I mean, I come from a country which is, I think, 40% of the population of Australia. We're even smaller than Australia. And we have more than, I think it's 9,000 startups today. And I think at least almost 1,000 of those are in semiconductors. So, I think Australia could definitely do the same.
For those interested, there's a rollicking read called Chip War that might help explain some of the kind of dynamics and where the potential for Australia might be to fit into that very kind of competitive landscape. Blair, we've got a question for you from David Johnson. How does the ASX manage the tension between supporting new technology listings at the same time exposing them to aggressive shorting behaviour by funds?
That's probably a difficult question to answer, but if you think about especially in the smaller, and I might just address one of the comments that a couple of comments Damian made, which was, we've got a great VC community here that we didn't have 15 years ago, and that community is very supportive of startup transactions and startup businesses. So you've kind of got a whole generation of companies that might have listed on ASX, perhaps when they were too small 10, 15 years ago, which are going to be bigger by the time they come to that. I think, from and the startup end of that, from a shorting point of view, people generally can't short because you can't board the stock sort of thing. So I don't think that probably happens in the smaller end of town. But I think at the end of the day, you've got a company that is performing according to plan and which is doing what it's saying and is delivering and doesn't have any issues. The shorts don't matter because in the end of the day, they're going to get closed out. They're going to get stopped out. If you've got a company that isn't performing according to plan, hasn't made full disclosures, has got some issues that somehow leaked out to people and somebody's shorting it, then that's going to be what happens and there's going to be an issue there. But I think it really is about full disclosure, making sure you're performing according to plan and making sure that you've got an active IR engagement process as well, because it's one of those things that we find you've got to continually tell your story to people and remind them what that story is, remind them what their value proposition, remind them what you're trying to accomplish, and remind them how you're making it continue.
Another question from the audience. We've talked a lot about sort of, I guess, colloquially, the valley of death. How do we stop the flight risk of companies that might look to the US and Europe with more sort of sophisticated ecosystems when they get to a certain stage of scaling? I don't know if anyone wants to tackle that one, but it's not a new problem.
I might just on the just before you jump, just on the valuation side, one thing that's really important because everybody looks at the US and goes, I want to take my company there and the values are way better. But the values fall off a cliff when you get out of the S&P 500. And again, a reminder, that's 25 billion US. They kind of drop from 6-7 times EV over sales to 1.5 times EV over sales. And, the alt tech sector here has got a value, multiple value of around, on average, around 6 times. So when you think about, trying to get capital and how to get access to capital, just keep that in mind about, everybody sees the big end of town in the US, but the multiples really fall off the cliff when you get outside that sort of thing.
No, not at all. I actually think that there's a couple of Australian companies now that we didn't have only 10 years ago, effectively running global businesses out of Australia, whether they're listed on the ASX or not. I think that this is also not a talent, but an experience problem that we are in the midst of solving. And I think it's an interesting solution that it's not just about capital. It's about the fact that very talented Australians want to go to the US because they can run a global function or a global business out of the US. Atlassian, Canva have proven that you can keep your founders here, keep your talent here, keep your leadership here, and still run effective businesses with significant units in the US. There are many Australians that are coming back from the US to Australia to run companies here as well. The nature of the PsiQuantum situation is interesting because we're talking about former Australians effectively coming back to run something out of Australia. So we do think it's a talent pool thing. We've worked closely with the government on the innovation visa, 5,000 innovation visas per year now for immediate permanent residence for talent that can run high-tech or global tech type of functions in Australia. There's more work to do here, but we do think that we are increasing our capability to run these things from Australia.
Jump in on a couple of points. a decade or so or more ago, I sat on the board of what was then called Innovation and Science Australia. I think it's now called Innovation Australia. And we met monthly, and the desultory task every month was to farewell companies who were going off to the US or Israel or Germany. You pick a market, because essentially they'd outgrown Australia at that time. And the real reason that they'd outgrown Australia was because they were growing, they were having success. There just wasn't the depth or pool of capital here to sustain them. And that's what drives them overseas. I think it's encouraging, and Damian's right, that there is sort of a flow back occurring now, but it's slow. But that's where we need to get. So we need to develop that pool of capital. Now, this takes me to my second point. That's why I sort of nodded over there. One of my joyous tasks, apart from my day job, is to be the Deputy Chair of Australian Super, and I sit on the Investment Committee of Australian Super. I'm longest serving Director of Australian Super. About $350 billion in funds. 1 in 5 Australian families have their pension in Australian Super. It's, I just reiterate that point, 1 in 5 Australian families. So it's people's money that we're talking about. It's not a broader pool of capital. It's mum and dad's money. The average pension fund is somewhere less than $100,000 in Australian Super. So I will leave it to management to talk about, but people look at super as if it's a honeypot and an answer to all our problems. Yes, it is growing, but there are a couple of things I just want to sort of keep in mind here. If you don't have if you don't bring a project to us that returns guaranteed CPI +4 don't come. If you're sort of under CPI +8, you're going to struggle. You've got to do way better than that. You've got to guarantee it. And there are hundreds and hundreds of proposals that come to us every day. We do things at scale. We just signed off, you would have seen it about 3 weeks ago, on $2.5 billion into US data centres. We've done the same in Europe. So we look at scale. We look at size, scale, long-term benefit. Super funds as a whole do not have a great track record at what you might call venture investing. It's a big loss maker. So that's why we'd like to do it, but we tend not to do it because we're not good at it. It's not what super funds are built for. It's not the way they're structured or set up or expected to do. So I just go back to mum and dad. What they want is a return on their balance fund. And if you don't make the return, they'll take it to another fund. So you're constrained in what you can do. So in many ways, your greatest strength is your greatest weakness, because it's a massive national asset for the country. But there are constraints around what super funds can do. So I just caution to think that it can be the answer to all of the problems. It can't, but it can be significant investors in things once they're up and running and operating. That's how I put it.
Thank you, Ines. There's a couple of questions about the National Reconstruction Fund and whether or not it's being taken up, what's happening, etc. Donna, that's probably not a question you can answer. I will say that the Chief Investment Officer of the NRF is making a keynote at the Innovation Awards next week. Sorry, it's a plug, but it's also very relevant. And hopefully she'll be able to shed more light on what's happening at the NRF. With that in mind, I think our time is up, and I'd like to thank our panel. You've been amazing and brought such a breadth of experience. Thank you so much.
Yeah.